Thank you very much, Eloise. So over the next 15 minutes or so, I want to give you an insight into some of the latest trends that we're seeing in the market. We really hope, as ever from Zoopla, that it will be of use to you when it comes to making your business decisions in the months ahead. So we're going to have a quick look at what's happening in the market right now and the impact that the pandemic has had on the market trends that we're seeing, and then having a look at what might happen next. So just before we start, I just wanted to share this chart with you from the Bank of England. Some of you may recognise it. It was recently in one of their reports, but the surprising thing perhaps is the shape of that V in the middle of this. So this is the UK's GDP, UK economic output, and you can see the impact of the pandemic. It just went right down. It's bounced back up, but the Bank of England's forecast for where the economy will be in real terms by the end of this year and early into next year, looks like we're nearly getting back onto the trajectory that we were on before the pandemic struck. This is no mean feat, this level of a bounce back, but we know that there are still economic headwinds ahead. Even so, you look at this V, there's plenty of parts of the economy that have been really affected by the pandemic. We all know that, but the housing market has remained extremely busy, something else we're all well aware of. Let's have a look at what that looks like in terms of our data. Now, before I do, I just want to share with you, when we're looking at data that I'm going to share with you, we're really looking at the top or the beginning of the funnel. So it's really kind of leading indicator data. So usually if you're looking at sales agreed or even sales completions, you're looking at 3 or 4 months after perhaps initial engagement from buyers, but we're showing you data right at the beginning of that funnel. So when it comes to buyer demand, the purple line is of interest to us today because it's showing what is happening to buyer demand, and that's real buyer engagement with agents who have homes to sell. It's really running very high. Now, it is very flattered by the comparison to 2020. As we know, the yellow line shows lockdown and the fall in buyer demand. But look at where it sits compared to 2018 and 2019. Really elevated buyer demand. And through the course of this presentation, I want to unpick what's sitting behind that. What we feel is really driving this buyer demand is a once-in-a-lifetime reassessment of home. So that's people going into lockdown, something we've never experienced before, being in their homes and deciding, actually, I think I might want to live in a different space. I think I may need outside space. I don't have to be in work every day. I can live somewhere else. I may want to be in a rural area or near the coast. So we've had drivers of this market. Now, there are 3 main groups within who are reassessing their housing needs. We have families perhaps who want more space within their home. They maybe want a home office, more outside space. We have first-time buyers, previously renters, moving on to the first rung of the ladder, and they're having a choice. What are they going to go for? Is it going to be a flat or a house? And where are they going to live? And then older homeowners, equity-rich homeowners, perhaps who didn't have any anticipation of making a move at the beginning of last year, who've now decided that I don't want to be in another lockdown in this property, I'm going to make a move. So a once-in-a-lifetime reassessment of home, and that's been driving demand through the course of the last 12 months. And when we put that into context for a snapshot of how that fits together in the market in terms of demand, and that's year to date, demand is up 28% compared to the average of 2020. Compare that to supply, and by that we mean the number of new homes being listed for sale. The total number of new homes listed for sale down 20%. So supply is not keeping up with demand. There's an element of this that through the beginning of this year, through the 3rd lockdown, when COVID cases were very high, there was a bit of reticence for some people to invite people into their homes for viewings. And so there is an element of maybe some new stock coming to the market. So the flow of stock coming is starting to kind of gain some ground, but it's not enough to kind of make up for that real erosion of stock that has happened because the market has been so busy. Also, those first-time buyers who are so active in the market at the moment, they're coming in, they have nothing to sell, but they're pure demand. So it's creating an imbalance between demand and supply. This is a trend we've seen right since last summer, and it looks like it's going to continue through this year for some time yet. All of that is putting upwards pressure on pricing. So here is the average UK house price over the last 15 years. And if you look at what's happening in the last year or two, you wouldn't look at this chart having not been aware of anything that's happened in the country or the world over the last 12 months, you wouldn't look at this chart and point to this point in time and say, there's the global pandemic. The housing industry, as we all know, remained open. And so lots of activity could take place. We had one of the busiest first quarters this year than we've seen in many years. So a lot of activity because of all that buyer demand, because of that reassessment of home that we've been talking about. But also, of course, then further boosted by the stamp duty holidays and then the stamp duty holiday extension. This upward pressure on pricing is definitely happening in areas that are perhaps more affordable on a UK level. So where average capital values are just slightly lower, there's more headroom for price growth, and that's what we've seen. So the red areas in this map is showing where we've seen some of the largest price growth in the year to March, and that's around the markets in the Midlands and moving up into the north. More headroom for growth allows more house price growth over the last 12 months in the face of stiff competition for some particular homes that I'll come to. And here we are, family houses, because when I talk about the rise in demand, the demand has been laser focused on those larger houses in particular that come with that extra bedroom that could be a home office, that typically come with outside space in the form of a garden. And what that means that in terms of supply, the share of family houses that have been listed for sale has fallen. So you see the black lines showing 2021, this year, the proportion of 3 and 4 bed homes being listed for sale compared to previous years in more normal markets, if you like. You can see the impact that's had. So that in turn is pushing up pricing for houses. So we've seen in the year to March, prices for houses up 4.9%, prices for flats also up, but only just under 2%. So we're creating a bit of a multifaceted market, not just geographically, but also when it comes to the type of homes. I would say though, we like to think of the market as a homogenous whole, but it's not. It's really localised, as we all know. And so I would just highlight that in terms of London, 70% of prospective buyers are still looking for flats in London. There's a real dynamic here that demand is coming in where there is supply as well. But I talk about this laser focused demand for homes. We're seeing it across the whole market, but in London in particular, still very much demands for flats in this area. And another theme that you may have seen over the last 12 months or so is the idea of the exodus from the city, from everyone upping sticks and moving to more rural areas. There is no doubt there are some rural areas that have seen a real rise in activity from a very low base. We've seen really strong demand in wider commuter zones because people not having to move in and out to the office as regularly, and people being able to see that that could be a longer term trend. It's not going to go snap back to normal as soon as we get over this pandemic. There may be more flexibility there. So when you look at the left-hand map and you just see the growth in listings views, the growth in searches for London buyers, and where they're looking, it looks like a real Southern England picture. You see people from London, you know, really pushing out in every direction, right down to the south coast. But when you focus in and say, right, but where is the biggest proportion of, where are the biggest proportion of searchers looking, you can see it's a much more nuanced picture. Really strong demand, and that's the dark purple in and around London and just the surrounding areas, and then a kind of push down into the wider commuter zones. So we're not just going pure rural here, we're definitely transport links still play a very big part. So this idea of a city exodus, there's a cohort of buyers from every city who have looked elsewhere. Most city buyers want to remain within the city or the wider commuter zones. So it's perhaps not as strong a narrative as perhaps has been presented. And when we talk about who's searching where and who's looking for what property, a piece of new research that we've done within Zoopla on the new homes market went into a bit more detail, just looking purely at new build developments. And we wanted to see where demand was coming from, depending on where sites were based around the country. And I just show you these two examples. We have Preston at the top and Milton Keynes at the bottom, and we looked at demand for new build sites there over several years. And we could start to see trends emerging in catchment areas. And it's a lot to do with how household income and aspiration and where other factors come together to create a narrative around how far people will travel for a new build development in that area. And you can see that in Preston, most of that demand is quite local, whereas in Milton Keynes, there are a lot of overlapping factors that mean that the demand pool is much wider for Milton Keynes. There's a lot more people looking for and looking to buy a home in Milton Keynes from much further afield. But we've broken it all down in the report into a little bit more detail and explaining all the factors that come together to show what kind of demand pools you will have for the new build market. And this research moves right into 2020. So if we come back to what the overall picture is in terms of supply and demand in the market, this is a long run picture of how that's looked right since summer last year. And you can see as we look at the right hand side of the chart, demand is still elevated, supply is starting to come up, but again, as I mentioned before, it's that flow of new supply which is starting to flow through, but it's not starting to build that erosion of the total supply which we've seen because of the very busy market we've had over the last 8 to 12 months. The search for space we've been talking about still feel it's got further to run. And this structural limitation on supply of homes, however, we feel could have an impact on the volume of sales as we move through the second half of the year. For house builders, it's the same story. Lots of house builders reporting very strong forward sales. And we can see from our data that new inventory coming on in the new build market is fairly flat. So again, that real pressure with supply not quite keeping up with demand in that area. And we've done another piece of research in the new homes market, just looking at a very local picture of supply and demand and how that looks across the country. Again, this is all available. Should you wish to see it, you can just contact us at Zoopla. And when we look in a little bit more detail on the impact that the pandemic has had on the delivery of new build homes, something I'm sure that fellow panelists today will be discussing, we can see it has had an impact. Now, the house building sector had to shut down in 2020. It was one of the first industries to open up, but then everyone operating at a distance. But what we can see is that the impact on the delivery of private new build homes has perhaps been more broadly affected than that affordable housing delivery. It's remained more static over the course of all these years, whereas the private sector has decreased and then increased again and then decreased in 2020. As offices start to reopen, as life gets back to normal, we can see those levels starting to rise again. But what we see here is that the number of starts, and that's the left-hand bubble, the number of housing starts in England, for instance, is well down in 2020 compared to what it was in 2019. So just under 130,000 starts compared to 150,000 starts. So that is going to have ramifications as we move through the next couple of years. So delivery is still constrained at a macro level and also in terms of homes being listed for sale. We heard from the Queen's speech, however, that the Prime Minister and policymakers are very much focused on home ownership, especially with this idea of the planning overhaul. They want to get more homes delivered and they want people to be able to own their own homes. So this has an impact, or potential impact, for shared ownership and other affordable housing tenures. In fact, when we think about it, we can see that there's this strong policy push, which is definitely beneficial. We've got Help to Buy is going to run out in 2023. So shared ownership, which is already gaining traction, there's real opportunity there. But First Homes is coming down the line, another affordable housing tenure, which goes straight into ownership at a discount purchase rate. Now, we're doing a bit of research at the moment, which will be out shortly, just looking at how all of that stacks up together. And it really comes down to a question of deposits. Depending on where you are in the country, the affordability and the ability to make that first step into ownership through the affordable housing route will depend on what scheme you use, what home you're buying, what the size of the home is, and where you are in the country. So that will all knit together to really give us a flavour and an idea of the outlook for the affordable housing and what tenures may be more popular in what areas of the country. Before I end, I just wanted to share with you this quick chart on the rental market. And why, you may ask? Well, it's really to show that the rental market reacts most quickly to the factors we're seeing in the market. And what we've saw in the rental market over the last 12 months is that outside London, in the wider commuter zones of many cities, and we've got supply and demand imbalance, just as in the sales market. That's keeping rents elevated, growing at 3% a year. But what we saw in central London was a lot of short-term rental supply coming onto the market. Global tourism had stopped, global business travel had stopped. So some of those short-term rental properties came on to the market, created rising supply, and that put downward pressure on rents, as you can see in this purple line. But that downward pressure on rents is starting to ease a little. We're starting to see rising demand among renters for city centres, which we hadn't seen during the course of the previous 12 months. So there's just a sign that even, we've had the easing of the lockdown, children going back to school, amenities opening up, high streets opening up, and even within the 6-week period, we can already see the impact that's having in the rental market. So the question for the sales market is, how far does the pendulum swing back? A lot of buyers will have been looking through the end of the pandemic. You don't buy a house on a short-term basis. You're normally thinking medium-term at least. But some other people may have been kind of keep holding their own until they get a clear idea of what's happening with work, whether they're going to have to go into the office. So it's all a case of how far the pendulum swings back. Will we need to be in the office 5 days a week? If not, there is still real opportunity, wider commuter zones and well-located, more rural areas, especially for house builders as we move through the next couple of years. So these are some of the thoughts I would leave you with. We've still got the pandemic shaping demand across the whole of the market, and we do believe this will continue for the next 12 months at least. House price growth currently running at 4%, as we saw in one of the earlier slides. Now, we do believe those economic headwinds coming later in the year, end of furlough, may have slight downward pressure on prices, but we do think it'll end the year in positive territory. We've got a lack of supply, and we've got stamp duty ending, so we think that volumes will ease from very high levels, I would add, as we move into the second half of the year. The demand for new homes remains strong amid constrained supply, just as in the resales market. And we've got access to home ownership through whichever route is possible. So we've got help to buy through private ownership starting to recede over the next 2 years and beyond 2023. And then you've got the rise of the opportunity for shared ownership and for first homes. Thank you very much indeed. And I will hand back to Eloise.